Today, we're diving into the world of gold investment, a hot topic that's on many investors' minds right now. So many of you are asking, should I buy gold now? The price is climbing, and you're probably wondering if you've missed the boat or if gold is now overpriced. You're all upside down on what to do. Well, worry no longer. This video will have you the right way up in no time at all. So let's cut to the chase. Should you own gold? Yes, you should. As the legendary investor Rick Rule says,
I continue to save some of my liquidity in gold. I don't own it because I think it might go from 2,000 to 2,275. I own it because if faith in the system gets shaken, I'm afraid it's going to go to $8,000 or $10,000.
the implication here is twofold. The first is obvious. You want to invest in gold because you don't want to miss out when it climbs to nearly five figures. But more importantly, you want to invest in gold because if the price does reach those levels, then there will be a number of factors that will be responsible for that. And let me tell you, none of them will be good news. So let's look at gold's role in your portfolio. Number one, it acts as a hedge. Gold has historically performed as a hedge against systemic and monetary risks, inflationary and deflationary policies, stagflation, uncertainty, and geopolitical risks. But you might argue, inflation isn't that high, and central bankers are pulling out all the stops to bring it down. Yes, you're right. Central bankers are putting measures in place to reduce inflation. But tell me, does your money go as far as it did, say 10, 5 years ago, even a year ago? Chances are that no. The devaluation of the money in your pockets is ongoing, as is the inflation of goods, services, and energy costs. Number two, diversification. Gold lends itself well to a balanced portfolio, as historically it has a negative or weak correlation to price movements in the financial markets, especially stock markets. And number three, gold is the safe haven. Gold is the borderless currency. It does not require a monetary system, a financial setup, or a central bank in order to exist. Only global markets control its supply, demand, or its price, not governments or central banks. It is this combined with its finite supply and indestructible quality that has enabled gold to hold value over long periods of time, and this is a stark contrast to other asset classes. Fourthly, there is no third-party liability. Compared to stocks, shares, gold derivatives, and currencies, there is no third-party liability. When you own physical gold bullion, the gold is entirely yours. For other investments, it can be the case that the underlying asset is very much dependent on how additional parties choose to act. Number five, liquidity. The very liquid global gold market means it is straightforward for investors to both enter and exit from their investments. The price is set by the market, unlike many other investment and currency options. And finally, gold protects against uncertainty. Ours is an uncertain age. Just in the last decade, we have faced the fallout from a global economic crisis, major climate disasters, political upheaval, and a global pandemic, not to mention the potential of World War III starting. These have all left us with a rising cost of living and investments that are losing value. This is why gold is a necessary asset for your portfolio. It is your insurance against such events. For millennia, humans have trusted gold to represent their wealth as they cross borders, as they face new regimes, as they fight wars, and even to express their love for one another. Yes, gold is shiny, which helps to make it attractive, but ultimately, we trust it because it works to protect us in times of need and performs over long periods of time. And it is that phrase, long period of time, that is key here. You don't hold gold to make a quick profit. In the same way you always expect to pay for insurance for your home, you should always expect to have gold in your portfolio. It is insurance. As our good friend Rick Rule says,
I'm a reasonably large bullion holder. And one would wonder if I had an independent financial advisor why I hold bullion. I'm the largest shareholder of Sprott, which theoretically should do very well in a time of higher gold prices. But at age 69, gold helps me sleep well.
You hold gold so you can make the other investments that you hope will make you big returns. So how does all this answer whether or not you should buy gold now? To conclude, the price of gold is climbing because things are not going well elsewhere. If gold now seems expensive to you, ask yourself, will it seem so expensive when in a couple of years' time, the money in your bank buys you even less? This is a really fantastic approach if you're anxious about timing your gold investment. Cost averaging means reducing your market timing risk. It's a disciplined way of investing, and it removes any emotional or reactive investment decisions. And it's a great way to manage cash flow. Definitely worth looking into. So there you have it. Is now the right time to buy gold? Anytime is the right time to buy gold. But if you have any more questions or any more curiosity, check out the rest of our gold education series.